And hello again, everyone. Welcome to another edition of Frazier and Deeter's Business Speed. I'm John Ray, alongside Frazier and Deeter Managing Partner, Alpharetta Office, Roger Lusby. Roger.
Good morning, John. How are you?
Good morning. You look great today.
Well, thank you. It's past April 15th, so that's always good. We got through the deadline. Everybody's done or extended. We've got April billing completed, and I'm looking forward to vacation next month.
You have got it buttoned up tight, don't you?
How about that?
I love that. I love that. Yeah, and you probably got some great surveys coming back. I finished mine.
Did you? Well,
yes,
thank you.
And they were across the board fantastic.
Well, that's always good to hear.
The experience at Frazier and Deeter is always good, and I can speak from my own position on that, folks. So just keep that in mind as you think ahead to your own provider. But folks, we want to welcome a terrific guest today. Ashish Mistry is with us. He is the managing partner of BLH Venture Partners. Ashish, welcome.
Yep, thanks, guys. Appreciate you having me.
Absolutely. Thanks for being here. For those that don't know about your work at BLH Venture Partners, let's give everyone an introduction.
Yeah, so BLH Venture Partners is a private venture firm, so we focus on cybersecurity, SaaS, and e-commerce businesses really on the early stages. So as operators, we've had the chance to sort of sit behind the wheel and work with entrepreneurs as well as operate companies in those spaces ourselves. So we're here in Atlanta and excited to be part of the community.
Yeah, that's terrific. Talk about your background.
So my background, wow. So finished at Emory in '98 with a degree in religion, which obviously is what you need to be in technology or any other science-oriented vocation. But we started a predecessor to what's now Leapfrog Services called Vertex Networks. That was till 2001. Around that time, I went to work with a cybersecurity entrepreneur named Jay Chaudhry at Air Defense, and so was there for a number of years. That company was acquired by Motorola in 2008. Mm-hmm. So I'd sort of departed a little bit prior to that, but had great experience there, and that company was a nice way to learn a lot. And then around that same time, I met my business partner, and we started really what was two ventures at the same time. One was BLH Venture Partners, which, again, a private firm basically investing off balance sheet in early stage companies. And then also this company called Control Freak, which was a fun run in the video game accessory space. We made kind of the Under Armour of video game accessories. We made ergonomic products for the Xbox, PlayStation, and Switch until that company was acquired in December of 2020.
Oh, wow. And you started it when?
That was late 2009.
Okay.
So, yeah. So
okay.
A number of years.
But it's been fun watching Ashish's career. I mean, I knew him when he was just out of Emory, and it's been a long time, and he's done a lot of successful things, and so we're glad to have you this morning.
Thanks, Roger. It's been fun to have you in my sphere as well.
So, I mean, I've got to ask, if you're a religion major from Emory, what you took something out of that's helped you in your career, right? Maybe it's being ecumenical about how you look at different investments or something. Well, but say more about that.
Yeah, well, I think what you learn is that you've got to engage and connect and be able to listen to stories and be able to tell them too, right? When you're selling or out there talking to customers or listening to pitches, you really open your ears and try to get into the mind or the head of the person that's really pitching you. And so, and then the other component of it was just building a network. And so we spent a lot of time community building early. And again, I'm not saying that we were doing that in college, but between the Atlanta CEO Council and Venture Atlanta and all the different things that I was able to be involved in, building that network really helped. And so when you needed something, you're able to call a guy. And so, when I needed something for, on the accounting side, called Roger. So
I mean, we all do the same thing. Our networks are very, very important. And you, like us, have to learn an industry quickly.
Yeah, for sure.
Yeah. So, talk about the different elements and investment, I guess, focuses that you have there at BLH Ventures. So you've got cyber, e-commerce, and SaaS. Mm-hmm. Talk about why those three.
Yeah. So, the short answer is it's because it's what I'd done in my past.
Mm-hmm.
And so, we probably do a lot less cyber these days, just because that world is so complicated and moves so fast. But SaaS software.
But Atlanta's had such great success in that space.
Yeah. And again, like you look at the pedigree of the people that we had and worked with. I mean, people that have taken the companies public, people that have sold companies, and just a level of talent. There's been a, huge boon early, but it's a little bit more niche-y for us here now because there's so many other technological, areas. So, you've got between MarTech and supply chain and healthcare, you got so many verticals now. It's not just one area. And then lastly, the e-commerce vertical was really happenstance because we'd started Control Freak right at the same time we'd started the venture firm. And we kind of learned e-commerce, sort of figuring it out step by step. And we bootstrapped that company from, $25,000 investment to doing more than that in revenue, $25-50 million in revenue by the time of its exit. And so we learned e-commerce sort of like you would sort of, out there fishing, doing anything else. You just sort of have to go out and do it. And then it informed our thesis to invest in that area. And we've done, probably half a dozen so investments in that area alone.
And did you have that company during COVID?
We did.
Yeah.
Yep.
So and of course, COVID just put all of the e-commerce on steroids.
Yeah, it was a great time. I mean, we literally, we were at ATDC. So we were in Midtown ATDC for 14 years on a rolling 90-day lease. And so March 11th, we're like, all right, everybody go home. That next lease renewal, we lost the office space, furniture, people, taking monitors and chairs and things home. We didn't look back. And so, December of that same year, the company was acquired and, we didn't have a real estate obligation. The acquirer was very happy about that and made things pretty seamless. So,
yeah. Let's continue talking about that timing. So you think if the pandemic hadn't come along and really, as Roger said, given you that impetus, that you would have sold the company at that time, or what talk about the timing of that?
Yeah. I mean, look, we were in the process of somebody had expressed interest the prior year. So we'd had a book ready. And so 19 was like, all right, let's go out and get this thing done. We were on a great trajectory. Somebody's going to pay us a bunch of money. And then it sort of, we didn't see the number that we wanted to. And then 20 came around, and that year happened to also be a console refresh year. So Sony, Microsoft, and alike, they're going to change out their consoles in December. So that's always a slow year for us because nobody wants to buy accessories for a device they don't yet have. And so January and February were ticking lower, and we're like, oh crap, what do we do? What do we do? Well, we've been through this before on a console refresh, but then March hit, and then every day after March 11th was a record day.
Yeah.
And just clockwork, boom, 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 boom. Every day was a record. And then I told the guys and, kind of middle of the summer, get the book refreshed and then go out, and the deal was done in like 90 days.
Yeah. Amazing.
Crazy.
But we have so many stories like that on clients that were either impacted favorably or unfavorably. But we were lucky.
We were lucky for sure.
Well, but so let's talk and then there are those business owners, and you've seen this, Roger, plenty of times, that they fall in love with that trajectory, right? And they maybe want to keep getting the benefit of that and don't think about that maybe this is the time to sell.
Yeah, look, I miss my cash machine for sure. But at the end of the day, being able to sort of sleep well because that everything's taken care of is a lot more of a satiating feeling. And look, we're still relatively young. I know Roger told me he's known me since I was a kid, but we can still get after it, and we're already doing it again. So that team that was acquired by Jabra SteelSeries was back again. And so the whole team's back together, and we've launched a new business as of last year called Pickle, PCKL, which is basically making pickleball gear. So paddles, balls, and accessories. So we know how to make plastic and rubber things pretty well and innovate there, and the marketing and sales aspect. And so we've got a great pickleball business going already.
Yeah, and a super growing sport. And, you can buy that equipment directly from the company right there online.
Yep. And Amazon. So we did a lot of great things at Control Freak that we've translated over. So, we're in the top, 10 products on Amazon and pickleball already.
Oh, wow.
It'll be a $several million business with a very short period of time. And that's a lot in due in part to the people, right? You go back to the network, and you go back to, just taking care of people. Right.
And it's a growing sport. I mean, everywhere people are looking at adding pickleball courts or transforming some extra tennis courts into pickleball courts, and the battles that ensue thereafter.
Yeah,
and
we've seen some of those.
Yes.
Yeah. And it sounds like the common theme there is aftermarket accessories.
Yeah, it's becoming that. It wasn't the intent. When I got out of when I got out of school, my intent was to sell as few as something for as much as I could, as few times as possible. So I was like, let me go sell some Boeing planes or something. I never made it that far.
Yeah.
But we're selling products for $25 online. As long as the margin's good, you can be in good business.
Yeah.
So,
yeah, that's terrific. Ashish Mistry is with us, folks. He is the managing partner at BLH Venture Partners. So we're hearing a lot about pickleball, right? I mean, we seem to be, anyway, anecdotally, lots of investment going on in that industry. I mean, what do you see as the trajectory of that entire industry? Obviously, you're favorable about it, but where's it all going?
Yeah. So again, I think I ask people the same question all the time to see what they're doing and what they're seeing. Look, I think we're at the early stages and the early innings, if you want to call it, of this, of pickleball, just like you would have seen with lacrosse or any of those other sports that, were sort of in these niches early on, and then they sort of broke through to mainstream. I think pickleball has got the same trajectory. We're talking about it here today. When my parents are talking about it as Indian immigrants, like if they're talking about it, it's mainstream. And so it's not necessarily sort of tucked away anymore. And so as you see neighborhoods starting to convert courts, so you start to see dedicated facilities start to pop up, and there's real estate ventures there. You'll see a whole ecosystem of actual things that surround the pickleball kind of sport. So from guys like us that are making, products, physical products, to virtual things, there's training aids and things. The guys at Pickleheads or Atlanta guys here, they've got a, court finder product as well as other things. So you'll see digital, accompaniments, you'll see physical products, you'll see real estate. We've got a company that we're, sort of small investors in called the Painted Pickle. So Justin Amick has got the painted pin, the painted duck, the painted pickles opening up, I think, later this summer. So there's a lot of, other things that will be ancillary to just, the paddle and the ball. And so lots of interesting ways to make money around the space.
What is it about pickleball that makes this different from any of the other niche sports that have come along and tried to go mainstream?
It's approachable, right? My 9-year-old could play with a 60-year-old, and you know what? They'd probably have a good time playing. And so you've got a good social element to it, which makes it fun. You can be competitive. Like one of our top sort of, kind of athletes is a veteran tennis player who's one of the top 10 senior pros in America, Dan Granat. Dan, I think I'm not going to embarrass him by his age, but he's older than me, but he can play. And you've got people with varying degrees of tennis or badminton, racquetball, all sort of converging in this one area, which is sort of neat to see. And so a lot of talent coming at it.
Yeah. So you have built a team that obviously built successfully sold Control Freak. Then along comes this pickleball opportunity, and you've got that same team plugged in there. Talk about the secrets of building a successful team.
Yeah, I think, again, I don't know if there's secrets. I think what they are just sort of, it feels common sense, right? You take care of people, and you tell the people, if you take care of the machine will take care of you. You got to be in the right space. You got to have the right capital formation. You got to do a lot of the right basic things, but you're really building chemistry amongst people. And so, the president CEO of that business, he's a friend as well as, a colleague in a lot of ways. And so we can have very candid conversations about what's going on, what's right, what's wrong. Hey, what are we doing? He was over last night. We had, a glass of wine and literally talked through business stuff until 9:00 at night. And so I'd much rather work in that capacity where it's, you don't have to show up in a coat and tie, and have a formal discussion. You can, whether it's on the golf course or on the pickleball court or, over a glass of wine, you can get work done. It makes it a lot easier to be working a lot more and not even knowing it.
So without getting too specific, what do you think the next opportunities are for you?
We're always open to new things. So the answer is I don't have a specific thesis. We're in the mode of doing a lot of homework right now. I think with where the market is and where, valuations are, it's a great time to sort of, I don't want to say put pencils down, but really kind of open up the book or the internet and see what's trending and really do your homework such that you're ready. We have dry powder, which is great, but there's no reason to go deploying capital if you don't have to when the market will come to you. Mm-hmm. So I know we spent a lot of time chasing it towards the end of these last couple of years.
And the valuations are coming down. They're getting a little more realistic.
Yeah. Well, we just hope they don't come down too much for our own companies.
I understand.
Yeah, I guess there are some cross currents there, right? Yeah. So, let's talk to those folks out there that they've got their companies, they're looking for investment. What are some of the big mistakes that you see when someone comes to you looking for an investment? What are the mistakes they make?
Well, I think some of it, some of it's just experience, right? So I think making mistakes is great, right? Mm-hmm. And so as long as they're learning from getting feedback is huge first and foremost. So I would just say being prepared, right? Knowing your business, better than somebody that might be sitting across from you, especially if you're supposed to be the domain expert. Mm. My friend Alan Tatum will always say VCs are very good generalists, are very, subsurface, they sort of tend to lack. But look, we can pick up on stuff pretty quickly. We've heard the pitch, 100 times, if not 1,000 times. Insert different company problem solution here. Mm-hmm. We're looking for people that are really deep in their areas of expertise and that have the ability to retain and recruit talent too, right? So you can't just be the, call it the engineer that comes up with an idea. All of these things require teams. And so knowing that it's not just you, mm-hmm. Being able to get other people around the table. So showing up with just a single person is a little bit tough unless you're saying, hey, Ashish, help me build my team. I've got this idea, and you've got self-awareness. That's important. Yeah. And so I would say, one, just being a domain expert and knowing your business segment, also knowing that it's not just you that it's going to take to build this, and then you've got a path. And then just, being okay, sort of saying, hey, listen, I don't know everything as well. Yeah. And so leaning on others for help and guidance.
Yeah. And when you're talking about building a team, I mean, there are exceptions to this, I know, but there are a whole lot of venture firms out there that really don't do that. They're investors, right?
Yep.
Yeah. And so you've got that experience that you bring to the table for your portfolio companies.
Yeah. And so what I would say is that, most of the firms now are in the business of helping the businesses, not just deploying capital and sort mm-hmm. of saying, all right, go figure it out. Yeah. They've got to spend some time and resources making sure the business is resourced with human capital, not just the monetary side of it. And so to that point, we do it on a small scale, right? There's big shops that have people that are focused on recruiting and doing things almost like a big machine would.
Right.
We're still a little bit more, cottage in the way we approach it. We're not trying to take, majority positions in these companies. And we're just trying to help the guys or gals that have started them to get to the next stage.
And what's your parameters in terms of the investments that you make?
So we're pre-revenue. We look at companies that have a concept or have built something. So we want to see that somebody's put some of their own sweat equity into it, either because they have the opportunity or the actual aptitude to build something. So an engineer could do that. Or, hey, look, I'm a business guy. I've got my team in place. This is the market we're going after. We're going to have to build some software. It's going to take us a year to do that. So again, those are very pretty early companies, formation side. We'd balance a budget up to $2 million in each company. So mm-hmm. if you said, hey, John or Ashish, I want to pitch my business to you. We have zero in revenue. How much money do you think you're good for the life of the investment? I'd tell you, we'll do $250,000 to $500,000 in 4 to 8 increments, right? So you know where we're sitting.
Right. And as you go along, how do you maintain alignment with your investment partner? If as you're running that company, talk about that, the skills that are involved there, right?
Yeah, and so I think sitting on both sides of the table gives you empathy for the founder and the entrepreneur, mm-hmm. as long as there is clarity and honesty, mm-hmm. right? Shoot me straight, and I'll shoot you straight, and you kind of don't. There's no question as to where you are. I think sometimes founders can get they're afraid of not knowing, and it's okay to not know. But have that conversation, but don't try to hide it. And because what's happening is you're burning money and you're burning time, and those two resources are the most precious that you have.
Right.
So be okay. It's okay to have open dialogue, and there's no expectation that you know everything.
Well, and that's where you've got to make sure you've got the right partner to begin with, right? That welcomes that open dialogue.
Yeah, and that's one. It's up to look. It's like hiring an employee, right, or a teammate. It's as much your fault if you hire the wrong person, right? Because you're running the process, right? And you should have done this a bunch. And that's my job, is to evaluate the people as much as it is the problem, the solution that they're presenting. Yeah. And so, it's a bad investment. It's my fault, not the entrepreneurs. You can only blame them so much.
Ashish Mistry is with us, folks. He is the managing partner at BLH Ventures. So, back to e-commerce for just a second, Ashish. What does that look like in general now? I mean, obviously things have petered off quite a lot, particularly depending on the space. Amazon's laying off tons of people. What does the e-commerce space look like from your perspective right now? Yeah,
so I'd say that the landscape's changing. Like, we're in the middle of a pretty big shift, right? So I kind of joke around. I'm like, oh, the internet's broken, because the way you could build a brand like we did when we did Control Freak at its onset is very different than how you have to approach it today. The Apple changes to iOS in terms of tracking, Facebook's changes on their platforms to tracking. You're not getting flashed ads the same way you were. And so our ability to acquire traffic, you had companies like Harry's Razors and, Dollar Shave Club, you name it, that were able to build these direct-to-consumer brands by spending a ton of money, getting a bunch of people interested, and then trying to convert them in whatever mechanical way the math works. But it is tougher. We're back to old school sort of. I might be looking at direct mail for some of the things that we're doing. And if you've probably seen, look, the catalog volume in your mailboxes is probably up.
Right.
Those guys that have those direct mail businesses are happy once again. And so, digital marketing has changed. That landscape's changed. I mean, consumers still want fresh product. They want new brands. They want great experiences. It's just you can't rely on what worked before. And with new platforms like TikTok and, obviously Instagram's there, they all convert differently for each demographic. So with the pickleball business, for instance, we're learning that, hey, look, Instagram and TikTok are nice to haves, but Facebook's a must have. And you look at the demographic of pickleball, it started out as older, right? All those constituents were on Facebook, looking at their grandkids' pictures and things. And so,
sure.
What's new is old and what's old is new.
Those are interesting comments. Appreciate those.
Yeah, thanks.
Yeah, and particularly for me, Roger, the comment about using the mail to build a SaaS business, that's fascinating. And I guess our mailboxes are not quite as full as they were 10 years ago, obviously. So,
but our email boxes are.
For sure. Yeah.
Yep. And look, there's interesting companies that can come out of all these things, right? When you start to blend the two, direct mail and email, and there's some pretty interesting opportunities, I think, that'll be out there. So keep your eyes and ears open.
So the SaaS market, what does that look like? To give us your observations there.
Multiple compression. And so I think, we're not seeing the exits. Obviously, the M&A environment's pretty quiet. I think getting 10x revenue for a company that's growing, unless it's really, really special, is very tough. And I think companies that, everybody, at this point in time is focused on profitability and how do you stand on your own 2 feet. Companies that are going to have to raise money that are sort of, I want to call it half pregnant, are going to have a tough time when they have to go back out to market if, we haven't gone through complete sort of cycle flush yet. And so I think some of the smart businesses are being thoughtful and conservative about capital, and, focused on the right things, gross margin, average selling price, gross margin, and profitability. Those are going to make a big difference. And you'll see that once the M&A cycle starts to tick up again, those companies will be the most sought after. And so I think that's where things are at in SaaS.
Hence your cash reserve. I mean, keeping some dry powder, given what you're describing.
That's it. Look, we're thankfully we don't have to go raise money. It's just my partner and I. We've been okay to be able to do that, but we also we don't charge ourselves a management fee. And so, it's a different environment for us. And so we're just making sure that when the tide turns, we're ready to go.
Yeah.
So,
but I think he's right. I think a lot of the bigger companies are going to be focused on gross profit margins, efficiencies. I think the layoffs that they are having is more to get back to a more efficient operation. I think during COVID, we had a tendency to throw money at a lot of things trying to solve a problem, and I think that's what we're seeing right now.
Yeah, I mean, look, people made a bunch of money during COVID, right? If you look at
depending on the industry, that's right.
On the industry, and the technology industry was a key beneficiary of that.
Huge winner,
and they can also move pretty quickly to retrench, and so we're seeing some of that. I think there's still probably some bloodletting to go, but look, we got to get through the cycle.
Talk about the switching gears for a second. Talk about the ecosystem we have here in Atlanta and how you look at that and the opportunities that exist here from your perspective.
Yeah, so I can tell you, one, the ecosystem is much more advanced and much more mature. What I used to say was my biggest concern about our ecosystem maybe 10, 15 years ago was that when the tide went out in a business cycle like this, would our community come back as strong? And the one thing I'll say is that our community basically stayed put and is actually very, very cohesive, and the verticals are very defined. So it's not like you can just, the tide just sucks everything out. And so we had that back in 2000 to a degree where the tide sucked some, the energy out. And it took some wins from some key entrepreneurs to one, give us staying power, but then also continue to beat the drum, even during other cycles. And so way bigger community, things like Venture Atlanta, which is now one of the biggest venture conferences in the country. It's huge, right? It's a draw. If you look at the speakers that we had, the presenters that we had, it's we're doing the right things, and the technology industry and community is a key community of the overall Atlanta business ecosystem now. And so what I said, I used to say was Atlanta's awesome because it's never going to be at the top of the highs, it's never going to be at the bottom of the lows because it's got such a well diversified economic base. And now the technology industry in our town is just another one of those. So.
Well, I mean, we're well positioned. I mean, we're the capital of the Southeast. Yeah. We've got great educational institutions here. We've got engineering degrees. People want to stay here. They want to be in Atlanta.
Well, to that point, Roger, I mean, we used to send our engineers to California.
Yeah, I know.
And now the companies are coming here, and so that trend alone tells us about the ability of our community to really kind of be a player and not just a resource for talent that others could pick off.
Yeah.
Now we'd say, hey, we're taking companies from their markets to become a second headquarters or a regional HQ or a major dev center. And so it's a great sign for our ability to stay.
Yeah. I mean, we might not be there with Boston, maybe not even Austin, but we ought to be right underneath there, I think.
Yeah. I have no chip on my shoulder for where Atlanta is today as I did probably back in my early days.
Great words from Ashish Mistry, folks, managing partner, BLH Ventures. Ashish, thank you so much for coming in, and we're delighted we could shine the light on the great work you do. Thank you. Thank you for that work. Before we let you go, though, let's give some contact information for those that would like to be in touch, learn more about you and BLH Ventures.
Yes, our website's www.blhventures.com. And then if you're interested in pickleball stuff, www.pckl.com.
There you are.
Absolutely. How are you at pickleball, Roger?
I haven't played, John, but I think I'm going to go order something from Ashish.
I haven't either.
Today.
So maybe
it's not an expensive sport, John.
I know. Maybe you and I could be in the same beginner class.
I just didn't want to be perceived as being old moving over to the pickleball courts. But
got a net in the trunk we can put out in the parking lot.
I like it. Good stuff. Ashish, thanks again for being with us.
Thanks, Seth.
Hey, folks, just a quick reminder for you that Business Beat is presented by the Alpharetta office of Frazier and Deeter. Frazier and Deeter is an award-winning international CPA and advisory firm with a deep technical expertise and an even deeper dedication to their clients. Their CPAs and advisors believe in investing in relationships to make a difference. For more information, go to FrazierDeeter.com. Roger, this has been fun today.
It has been, John. I enjoyed it, and we'll look forward to our guest in June.
Absolutely. We look forward to that. And, folks, we look forward to having you with us here on Frazier and Deeter's Business Beat.